Well, ladies and gentlemen, it is like rats fleeing a sinking ship at the moment in the financial sector. It is absolutely crazy. And if you think my videos are detailed, usually this is 7 or 8 pages here, double-sided, of all of my notes for today. And then all the red is additional notes. It is absolutely insane. No one seems to be understanding really that what is going on in the markets, and the fact that the entire financial system almost collapsed again just before this weekend. And all the central bankers got together on Sunday, yes, Sunday, to try and iron all of this out and figure out a solution. But you wouldn't know all of this is going on if you look at the mainstream media, where front page today on all of these platforms was Trump and a prawn, we'll use that word, actress, and how the US is about to get set for one of the most expensive weeks of protests in US history, as Trump is going to be, charged over something or other. I'm not even sure what it's all about. All I know is that it's a massive distraction from this, and this is what you should be looking at and not what's on the TV, because this is really, really serious. If you've got money in the bank, if you've got savings, then I'm just going to outline everything today that is going on. I'm going to do it as quickly as possible, because otherwise this would take me hours to get through it all. So what do you need to know right now? Over the weekend, there was this massive rescue plan that happened in Switzerland. Switzerland is supposed to be one of the, well, it was always the safest place in the world for not just money, but for precious metals in the vaults and all sorts of things like that. Why? Because they were neutral. That's where the expression came from, to be Swiss, which originated, I think, someone will correct me if I'm wrong here, around World War II, when the Swiss were neutral on most things, and being a very mountainous region, and they had a lot of the gold of the Germans and everyone else and other places, very difficult to overtake and invade. Now the Swiss seems to be getting involved in everything, conflict as well. But I never thought I'd see the day that their banking system almost collapsed, which is basically what happened. And even worse than that, I'm going to tell you about what happened to the bonds. So this was with Credit Suisse. This is pretty much unheard of, and we've got a statement on this as well, which again makes no sense. It's a smokescreen. So here's the headline: while the nation's central bank, so the Swiss central bank, and financial regulator publicly declared, keywords, publicly declared that Credit Suisse was sound, behind closed doors, the race was on to rescue the nation's second biggest bank. So this is why I said in my video last week, it's obvious what's going on. The President of the United States, the Prime Minister of the Bank of England, and all these other, world leaders, they don't just stop what they are doing and make an emergency press announcement for no reason whatsoever to tell you, oh, don't worry, everything's sound, the banks are sound, all of your money's sound, everything's fine, don't worry, we're really strong. And then they walk away without taking any questions. It's obvious what's going on. There is a massive, and this gets even worse, by the way. I'll get on to the next bit in a moment. But my point here is that whatever you see them saying publicly, and again, when you see a bank spending a lot of money to put a press release out saying how strong the bank is, and when they're sending you emails and all this, that usually means, not always, but usually means that there's a problem. So just be really, really careful. Now, the key thing that happened then was, on Sunday, Credit Suisse was bought for $3.2 billion by UBS just 2 days after an $8 billion valuation. But here's the bad thing. A total of $17.2 billion in Credit Suisse AT1, so these are bonds, okay? AKA contingent convertible bonds, were completely wiped out overnight. Pay very, very close and careful attention to this, because what happened was, it was the bond holders. Okay, they're meant to be super safe. Okay, AT1 are not as safe, but they're supposed to be safe. It was the bond holders that were wiped out, and the people who own the stock, so the stockholders, were not wiped out. They got $3.23 billion under the UBS deal. So what was the justification for this then? They stated it's only fair that investors share the pain from Credit Suisse's troubles. Well, this is nonsense, because the bondholders are not investors, they're bondholders. The investors are the people who own the stock. So what they're saying is complete upside down speech, I guess we can say here, because it absolutely makes no sense at all. So what you're going to see now, I believe, is AT1 bonds all over the place, or globally. You're going to see a lot of issues. I think if it were me, I would be selling mine, especially in UBS. Who is still holding? If you're still holding your bonds in UBS, good luck to you is what I'll say. But it wasn't just that. We had a massive wipeout of Sweden's biggest pension funds and a loss of 7.5 billion krona. So it's absolutely unbelievable what's going on here. And when they've been asked for comment, so this was the Swiss National Bank declined to comment on any questions around the safety of the banking system. I mean, that's crazy. Surely, I mean, you're better off telling lies to people if you're the central banks and coming out and doing what Biden and everyone else said and said, oh yeah, everything's fine, everything's safe, don't worry. But to not answer the questions is even more worrying. Now, this doesn't just apply to Credit Suisse and Switzerland. This applies to all of you. This is a global interconnected crisis. The whole banking system is on its knees, and that's why they're trying to distract you with major events. And I was speaking to someone earlier saying, don't you think this is a bit suspicious that, again, I don't care about politics, you know that about me, but don't you think it's a bit suspicious that there's this massive case now against Trump at the same time as the banking system is collapsing? And knowing that this is going to cause massive social unrest, what they are calling the biggest, most expensive protest possibly in US history or modern US history. And they're going ahead with a lot of this stuff. It's crazy what is going on right now. But even more crazy, if you were a Swiss citizen, according to a lot of these reports, you're now on the hook for $13,500 per taxpayer. That is your share of this bailout. But the central bank is saying the taxpayer in this scenario has actually taken on less risk. So this was the best option for you, $13,500, because if they didn't do that, the entire banking system of the Swiss economy would have, well, they say would have been huge, but what they're really saying is would have collapsed. That would have spread. You would have seen a contagion effect. And this is why it's so dangerous now. If just one of these massive banks goes down, it is going to cause a contagion effect. Now, yesterday, so this was Monday, Credit Suisse shares tumbled by 52%, despite this massive bailout and everything else. I understand it's too big to fail, but this is just getting crazy now. They're just throwing more and more money, or it's actually debt, after good. And you think now what's happening with the US banks, we'll come on to this in a moment, they weren't solvent at, almost next to 0%. But now they're taking on all this fresh debt at 5% or more. This is absolutely insane. It's just a massive Ponzi scheme, which is just getting propped up by even more debt. As soon as the rest of the world starts to realize this and they send those dollars, those chickens home to roost, it is going to be... And it was only on Friday I mentioned this, and I said, I don't know when it's going to happen and everything else. But just over the weekend, all these things make me even more convinced that we're heading towards a massive banking crisis. So guess how much money I now have in Swiss francs? Guess how much gold I have in the Zurich vault? 0. That's how much. And I would suggest you do the same. Even the UBS long-term deposit ratings and senior unsecured ratings went from stable to negative now. So this is UBS, one of the biggest banks. S&P Global Ratings also revised its outlook for UBS to negative. The French insurer AXA, if you've got AXA stock or exposure, pay attention again, has about $640 million exposure to Credit Suisse. And bearing in mind, the stock price of Credit Suisse is down 99% off of its 2007 valuation. So it's lost 99% of its value. Who had the biggest holdings then in Credit Suisse for these AT1 bonds? And by the way, remember, it's always supposed to be that the bonds are safer than the stock. But this time they just flipped it around and they just let all the bonds go to zero. This is why I always say, be careful with bonds. Yes, okay, they've been safe up until now. And I said this before this happened over the weekend. I've always said yes, but be careful with bonds. It really is only a matter of time until you start seeing some issues here. But PIMCO and Investco had the biggest holdings in Credit Suisse, around 1.1 billion. So next, we're going to jump around a bit here. This is the Federal Home Loan Bank of the USA. So they've just been issuing credit like crazy. They've issued $304 billion of debt in the last week. So what are these? And most people aren't aware of these, don't really understand them. So I've got an official definition here. They are a Depression-era backstop originally created to boost mortgage lending. The system, now a key source of cash for regional banks, is known as the lender of next to last resort. So that's kind of a sort of play on words here for the Federal Reserve's discount window. But the key thing you need to know is that a large number of banks, we don't know who it is at this stage, borrowed $165 billion from the Fed crisis lending programs. So that's double 2008. And this has all happened within the last week. It's obvious, ladies and gentlemen, where this is going. So this now is $1.1 trillion. That is the advances from this program. This is just waiting to collapse. And remember that this is short-term debt as well. So if rates continue to go up, this is going to get even worse. And again, some of these banks, they couldn't manage their finances at next to zero. So now when they're close to 5%, how are they going to, I mean, this is ridiculous. This is their assets. This is their liabilities, which means that they have double the amount of debt, for example. What do you think is going to happen long term? But yet they're just throwing more and more money at this problem, hoping it's going to go away. It's not going to go away. As I've been saying for a long time, this is just building up to a massive bubble and it will pop. I'm actually amazed by the amount of people that joined my private community in the last week or so. I mean, I've hardly slept. Look, I've had several of these because it's just inundated, and that's why I'm not taking on any one-on-one clients at the moment, because it's about 2-month wait now. I've just been inundated now because of this whole crisis. I think another thing that's happened is everyone who thought I was crying wolf when I've been saying this is going to happen, it's now happened, and people have started coming back and saying, okay, maybe you weren't so alarmist after all. But even the actual amount of M1, so in fact, let's talk about cash that was issued over the last few weeks, has been absolutely huge. They're keeping this very quiet, but the bank branches have been running out of cash because so many people have been going in to remove cash from the banks. So this emergency facility that exists for a lot of banks is just being overrun at the moment. And of course, you don't see this anywhere. No one really knows unless you work in a bank what's actually going on. But this Federal Home Loan Bank, so this is what we're talking about, FHLB, is comprised of over 8,000 financial institutions, including large banks, small community banks, credit unions, insurance companies, and community development organizations. Let me just give you a little tip now, because I know some people will be asking this in the comments, and this is what will be on a lot of people's mind. If you have money in a small bank, again, I'm not going to include a credit union in this because they're all different, but if you have money in a small bank, I would be looking to move that to one of the banks that's too big to fail at the moment, just for safety. That is what I'd be looking to do, because I do think, even though Yellen is saying that they are going to pretty much prop up every bank that fails, it won't happen. And I'll tell you why it won't happen. Because she's saying our intervention was necessary to protect the broader US banking system, and similar actions could be warranted if smaller institutions suffer deposit runs that pose the risk of contagion. And then she goes on to talk about how there could be this, she's not saying this, but she's basically saying that there could be a collapse of these smaller banks, and that the actions reduce the risk of further bank failures that would have drained the FDIC's insurance fund. And again, I keep getting all these comments. No, Neil, the FDIC fully covers everything. It's got all the money. No, it doesn't. If it did, it would be shown on a balance somewhere, and it's not. The balance sheet is very clear. It's about 1.3% of all deposits. And that is why they took such massive action, because they know if this contagion effect ran, and I've got to tell you the big one that happened over the weekend with all the world central banks, the big ones, they know that this 1.3% will just be eliminated like that. That is why they're taking these extraordinary measures right now. And I'm even seeing comments from Canadians saying, well, we've got a really strong banking system and there's no problems here. Really? Is that why the Canadian Central Bank got involved in this as well? First, and this is another bank here, First Horizon Bank Canada was due a takeover by Toronto Dominion, but just last week, First Horizon shares tumbled 26% as fear and uncertainty spread across the US banking sector. In March alone, it's now hovering a 40% drop. Now, we've got to talk about what happened over the weekend. Here it is. Here's the big one. A group of central banks from around the world boosted the movement of US dollars through the global financial system to keep loans flowing to households and businesses and support the world's major economies. Where have you seen that in the headline news anywhere? The Federal Reserve, so this is the USA, the ECB, Bank of England, the Swiss National Bank, and the Bank of Canada, and the Bank of Japan. So there's Canada and Japan all got together to make sure there was enough funding to keep this very stressed market conditions from breaking. So let's just mention one other thing then. So the other thing is they're trying to do is keep money flowing to businesses, and they want loans going to businesses. But you've got to remember, businesses are in big trouble anyway. If they were struggling before with the percentage rates on loans, and they took all these bounce back loans for lockdowns and everything else, what's going to happen now, where they've already got this debt from before and the rates are now higher? And not only that, they've got these high energy costs. It's pretty obvious to me what's going to happen. We're going to have a lot more business failures. So what is the solution that these banks are proposing? They are saying that the customers are causing these problems by withdrawing their own money. Yes, they actually said that. And they said the solution would be for customers to stop withdrawing deposits. But there's also calls for, this is from the US authorities, to guarantee all customer deposits. So this is regardless of whether they're insured or not. And their justification, they said the argument is that the US can just print to infinity. Again, this is wrong. This is completely incorrect. Yes, they can just do that. But what would this lead to? Mass amounts of inflation. You're already going to see inflation as a result of what they've done already. We're going to see more inflation around the world because of this. But they can't just keep printing. Because, and again, they don't even print now, it's numbers on the screen, because this will lead to hyperinflation. That is what happens. So I think I'm probably going to have to continue on with a lot of this tomorrow to update you on everything that's going on, because there's just so much. There is so much happening. And here's the thing that really made me laugh. So after the bailout of SVB, the UK branch paid out millions in bonuses to the bankers at the bank. Talk about a big payday there for, I'm not exactly sure what, as this bank was about to collapse. But yeah, definitely make sure you get a bonus for that. All right, well, thanks for watching today. We'll continue again tomorrow. Thank you so much for being a subscriber here. Take care. God bless. See you tomorrow.